If the person buys a debenture, then he will be contributing in the form of a loan to the company. So the rate of interest which is charged by the banker, it will be decided by the RBI from time to time. Whenever we avail a loan facility from the banker will collect details of the customer. Whenever we borrow from a commercial bank, it will be for a short period only and we have to repay to the banker. Hello everyone, I am Purnima, faculty in the Department of Commerce, Vidyashram Pre-University College, Temple of Excellence. In this session, I will be having a discussion on the various sources of finances. So let us see that what is the next source of finance. Now, in the sources of finances, we have the debentures. Now let us understand what is the meaning of the word debenture. So debentures are an important instrument for raising long-term debt capital. A company can raise funds through the issue of debentures which bear a fixed rate of interest. The debentures issued by a company is an acknowledgement that the company has borrowed a certain amount of money which it promises to repay at a future date. Now let us understand what is the meaning of the word debenture. So debentures are considered as the loan capital of the company. So in order to raise funds for the capital, the company may issue shares or may issue debentures also. Now, the debentures are considered as the loan capital. If the person buys a debenture, then he will be contributing in the form of a loan to the company. Suppose he is a shareholder, then a shareholder will be contributing in the capacity of the capital to the company. So, we should understand that debentures are the loan capital of the company, or whatever money you have invested as a debenture in a company, it will be considered as a loan by the company and the company will be paying a regular rate of interest on these debentures. Now, let us see what is the meaning of the word debenture. So, debentures are an important instrument for raising long-term capital. So, the long-term capital may be anywhere between 5 to 7 years. So, debentures are an instrument for raising long-term capital. So, a company can raise funds through the issue of debentures which bear a fixed rate of interest. So, just like a bank loan, if we borrow a bank loan, so we will be having to pay a fixed rate of interest. The same way the debentures, the company will be paying a fixed rate of interest to the debenture holders. Now, the debentures issued by a company is an acknowledgement that the company has borrowed a certain sum of money which it promises to repay at a future date. So, just like as we borrow a loan from a bank and we have to repay it at a later date, the same way the debentures also, the money collected in the form of debentures will have to be repaid by the company at a later date. So, in this way, we should understand that the debentures is an acknowledgement by the company that it has borrowed the funds from such a debenture holder and it is liable to pay a fixed rate of interest and it is liable to repay the amount after at a future date. So, this is the meaning of the word debentures. So, it is one easiest way of raising long-term capital for the company. Now, let us understand what other we have to study in this slide. So, debenture holders are therefore termed as creditors of the company. So, in other words, the debenture holders are lending their money. So, whatever money they are having, they are investing in the company, it will be in the form of a loan and the debenture holders will be considered as the creditors of the company and they are paid a fixed amount of interest. So, it may be in 6 months or 1 year. So, the debenture holders can be paid in the interval of 6 months or it can be paid in the interval of yearly installments. Next, let us look into what are the merits and demerits of the debentures. Now, what is the merits of having these debentures? The first merit is it is preferred by investors who want fixed income at lesser risk. So these debentures, suppose you are investing money for the first time, then the safest investment is to invest in the debentures. Why? Because you will be assured of returns, and secondly, your investment is very, very secure. So the company will have to repay your money, whatever you have lent to the company. So it is the most secure form of investment, and it has fixed return on its investment. So that is why these debentures are considered as the most attractive form of investment for the first time investors. Then debentures are fixed charge funds and do not participate in the profits of the company. So whenever debenture interest is paid, what will happen? Whatever the interest they are paying to the debenture holders, that will be deducted from the profits, and whatever is the profit the company is getting, on that profit only it will have to pay tax. So in this way, the debenture interest will help in reducing the tax burden of the company. Then let us look into the next merit of these debentures. So the issue of debentures is suitable in the situation when the sales and earnings are relatively stable. Now, we should understand that debentures have to be paid a fixed rate of interest, and secondly, the debentures are to be repaid after a certain period. Now, we should understand that the company has an obligation to pay the interest at fixed intervals. So, in order to pay interest, the company should have fixed sales. Suppose the earnings of the company are fluctuating, then it cannot pay the interest to the debenture holders. So, it is necessary for the company to see that they have proper stability in the sales. Then, next one is, as debentures do not carry voting rights, they do not dilute the control of the equity shares on management. So, the next important merit is the company can issue any number of debentures. Why? Because these debenture holders, they do not dilute the control of the management. So if you keep on issuing equity shares to the shareholders, the number of owners of shares will increase, and as a result of which, the control of the management will be spread over a large number of shareholders. But in case of debenture holders, so we know that whenever equity shares are issued, the equity shares will dilute the control of the management. So whenever more and more equity shares are issued, the control will be dispersed over a large number of people. But in case of debentures, these debentures do not carry voting rights, as a result of which the control of the management does not get diluted. So these are the merits of debentures. Now, the next merit of debentures is financing through debentures is less costly as compared to the cost of equity or preference shares, as the interest payment on debentures is tax deductible. So, whenever debentures are issued, it is more cheaper for the company, because whenever we are issuing equity shares and preference shares, we will have to pay them more and more dividends in the form of profits. But then, in case of debenture holders, we need not have to pay them more interest, because the rate of interest is fixed in case of debentures. Next, let us look into what are the limitations of these debentures. Now, first thing is, as fixed charge instruments, debentures put a permanent burden on the earnings of the company. There is a greater risk when the earnings of the company fluctuate. So, the first limitation of debentures is, so there is an obligation on the company to pay the fixed rate of interest every time. So, it may be at the interval of 6 months or in the interval of yearly. So, they have to pay a fixed rate of interest on these debenture holders. But then, whenever the company is having good earnings, they will be able to pay it well. But if the company does not have good earnings, or if the earnings keep on fluctuating, then the company may find it hard to meet its obligations. So this is one of the limitations of debentures. Then the next limitation of debentures is, in case of redeemable debentures, the company has to make provisions for repayment on the specific date even during periods of financial difficulty. Now, what do we mean by redeemable debentures? See, redeemable debentures are those debentures which are to be redeemed after a specific period. So, it may be a period of 5 years or 7 years. If the company had issued debentures 5 years back, and now the time has come for the company to redeem the debentures, and if the company is facing a financial crisis, then it will be hard for the company to redeem the debentures, and it has to keep up its word at any cost. And so whenever, even though there is financial difficulties, the company has to redeem the debentures by repaying the money it has collected in the form of debentures. So this is the second limitation of debentures. Then the next source of funds are the commercial banks. So we all know what are commercial banks, because most of us would have visited the bank at one time or the other. So commercial banks are the banks which collect deposits and they lend money, so in the form of loans. So this is one of the major functions of a banker, and one of the major reason for the development of the nation is because of good banking facility in the country. Now let us see what this slide says. So commercial banks occupy a vital position as they provide funds for different purposes as well as for different time periods. So these commercial banks are there. They provide funds for different purposes. So it may be a car loan, it may be a housing loan, or it may be education loan, or it may be loan for a wedding or loan for anything. So consumer durable. So there are various types of loans which are offered by the bank, and it will be for very different periods. Suppose if it is a housing loan, it may be for a very long period, so for a period of 20 years, 25 years. If it is a car loan, it may be for a period of 8 to 10 years. So in this way, we can see that the banks offer loans to all the people who have the power to repay the loans. Now, next, banks extend loans to firms of all sizes and in many ways, like cash credits, overdrafts, term loans, purchase, discounting of bills, and issue of letter of credit. So the banks, they extend loans to all kinds of people. So all kinds of businesses. So for the businesses, they are offering loans like cash credits, or it may be in the form of overdrafts, or they may give term loans, or they may also give in the form of discounting of bills, or in case of export-import facility, they may also issue letter of credit. So these are the various ways in which the banker will be trying to provide funds for various aspects of the society. Next, the commercial banks, the rate of interest charged by banks depends on the various factors such as the characteristics of the firm and the level of interest rates in the economy. So what is the rate of interest? So rate of interest is the interest which is collected by the banker on the loan which has lent to his customer. So this rate of interest, it will be for different purposes. It will be a different rate of interest. Now the commercial banks, they charge a rate of interest depending on the various factors such as the characteristics of the firm and the level of interest rate in the economy. The loan is repaid either in lump sum or in installments. So whenever we borrow from a commercial bank, we can repay it in the form of installments, or we can always repay it in a form of a lump sum along with the interest which is charged by the banker. So the rate of interest which is charged by the banker, it will be decided by the RBI from time to time. Now, the bank credit is not a permanent source of fund. Though banks have started extending loans for longer periods, generally such loans are used for medium to short periods. The borrower is required to provide some security or create a charge on the assets of the firm before a loan is sanctioned by the commercial bank used for medium to short periods. So, whenever a banker lends money, it will be for a short period. So, he will have to take back the money, or we will have to repay the money at the earliest. Now, whenever we have to borrow a loan from the bank, we have to offer a collateral security to the bank. Now, this collateral security, whatever we are offering, based on the value of the collateral security, the banker will be deciding the amount of loan to be sanctioned to the customer. Now, whatever the loan will be sanctioned by the banker, it will be for a medium or a short period. So, we cannot avail a bank loan for a very long period. Now, the borrower is required to provide some security or create a charge on the assets of the before a loan is sanctioned by a commercial bank. So, we have to offer the banker some asset. So, it may be the personal assets or the assets of the business can be offered as security to the banker. Now, let us see what are the merits of having this form of finance. Now, the first merit is banks provide timely assistance to the business by providing funds as and when needed by it. So, these banks, they give timely assistance to the business people. So, whenever they need it, they are always ready to give these loans to the business. Then, the secrecy of business can be maintained as the information to the supplied to the bank is kept confidential. So, whenever we avail a loan facility from the banker will collect details of the customer. So, whatever is the business, so all the information relating to the business will be collected by the banker and it will be kept confidential. So, he will not reveal the secrets of the business to others. Then, the next merit of this commercial bank is formalities such as issue of prospectus, underwriting are not required for raising loans. So, it is an easier source of funds. Suppose we have to raise funds through the shares or we have to raise funds through the debentures, then it is a very cumbersome task. Why? Because we have to issue the prospectus and there are so many documents to be collected before we start issuing the shares and preference shares or debentures or equity shares, etc. But then if you want a loan from the commercial bank, we can easily avail it provided the company is running very well. So, it is one of the easiest source of funds. Then, the loan from a bank is a flexible source of finance as the loan amount can be increased according to the business needs and can be repaid in advance when the funds are not needed. So, whenever a bank sanctions a loan, so these loans can be used by the customer whenever he needs them, or if he needs some extra money also, the banker will be ready to provide that extra amount of loan to the customer. And then if the customer does not need that much money, he can always repay the money to the bank and that part of the interest will come down to the customer. Now, next, let us look into what are the limitations of having this source of finance. Now, the limitations are the funds are generally available for a short period and the extension of renewal is uncertain and difficult. So, as I had told earlier, whenever we borrow from a commercial bank, it will be for a short period only and we have to repay it to the banker. And in case you need a renewal, that renewal may happen or it may not happen. So, this is one of the limitations of these commercial banks. The next limitation of commercial banks is banks make detailed investigation of the company's affairs, financial structure and etc. and also may ask for security of assets and personal sureties. This makes procedure of obtaining funds slightly difficult. So, the next limitation of having this commercial banks is, so they need almost all the affairs of the company. So, whatever information they have, everything they have to collect and they may also ask for security of assets and also personal sureties. So, this makes the availing the bank loan facility very, very difficult. Then, the next limitation of this commercial banks is, so the difficult terms and conditions are imposed by the banks for the grant of loan. So, like restrictions may be imposed on the sale of mortgage goods, thus making normal working difficult. So, the bank may impose certain restrictions on the activities of the business. Sometimes the businessman would have mortgaged his goods with the banker and then he would have availed a loan from the banker. So the banker may impose a restriction on the sale of these mortgage goods. So this will make the business very, very difficult. So if the banker does not allow for the sale of the mortgage goods, then the businessman cannot do business. So this becomes one of the drawbacks for the business community. The next source of finance is financial institutions. Now, the government has established a number of financial institutions all over the country to provide finance to business organizations. These institutions are established by the central and the state governments, and they provide both owned capital and loan capital for a long-term and medium-term requirements and supplement the traditional financial agencies like commercial banks. So the main aim of setting up these financial institutions is to see that it provides funds for the business community. So anyone who is interested in starting a new business, he can always avail long-term loans from these financial institutions which are set up by the state government or the central government. So they are there to supplement the commercial banks. So in case the commercial banks don't give loans, then these financial institutions are always ready to give loans to the business community. Next, these institutions aim at promoting the industrial development of a country, and they are also called as development banks. So in addition to providing financial assistance, they also conduct market surveys, provide technical assistance and managerial services to people who run the enterprises. Now, these financial institutions, they are there to help the business community. So in addition to providing finance, they are giving various other services. So what are the various other services? They are conducting market surveys, they are also providing technical assistance, and they are also giving managerial services to the business community. So they are called as the development banks. So these financial institutions, they are there for the industrial development of the nation, and as such, they are also called as the development banks. Next, the source of financing is considered suitable when the large funds for longer duration are required for expansion, reorganization, and modernization of an enterprise. So we can always avail the loan facility provided by these financial institutions or the development banks whenever a company wants to go in for expansion or reorganization or for modernization of an enterprise. So these financial institutions, they provide large amount of funds at a reasonable rate of interest. So this is done to encourage the business community. Then let us go into the merits of these financial institutions. They provide long-term finance which is not provided by the commercial banks. So these financial institutions, they give long-term credit to the business community, whereas the commercial banks, they do not do that. They give loans for a very short period of 3 to 5 years. So more than that, they don't give. So this is one of the merits of the financial institutions. The next merit is, besides providing funds, many of these institutions provide financial, managerial, and technical advice and consultancy to business firms. The next merit of the financial institution is they provide financial, managerial, and technical advice to any business organization which needs such services. Then the next one is obtaining loan from financial institution increases the goodwill of the borrowing company in the capital market. Consequently, the company can raise funds through other sources. So whenever a financial institution is ready to lend to any company, so this will raise the goodwill of that company. So why this financial institution is lending money to this company? Because this company is running well. So when there is a goodwill of the company, this goodwill will in turn affect the share market, as a result of which the company can also raise funds through the share market also. So this is one of the merit of this financial institutions. Then the next merit is, as repayment of loan can be made in easy installments, it does not prove to be much of a burden on the business. So whenever a company is borrowing loans from a financial institution, so repayment can be made in easy installments. So this will not be a burden on the business. Now let us see what is the next merit of these financial institutions. The funds are made available even during periods of depression where other sources of finance are not available. So these financial institutions, they lend the money to the business community even during periods of depression. So during periods of depression, the commercial banks, they do not lend any money. So this is one of the main merits of having this financial institutions. Now, let us look into the next limitation. The financial institutions follow certain rigid criteria for grant of loans. So, too many formalities make the procedure time consuming and expensive. So, one of the main drawbacks of having the loan from the financial institution is there are a lot of criteria. They see a lot of things before they grant the loans, and then they will also be having lot of formalities which is very, very time consuming. Then the next limitation of these financial institutions are certain institutions such as restriction on dividend payment are imposed on the powers of the borrowing company by the financial institutions. So certain financial institutions, they impose certain restrictions on the borrower. So like they should not pay dividend or they should not give more loans. In this way, they'll be imposing certain restrictions on the borrowing company. Next, they may have their nominees on the board of directors of the borrowing company, thereby restricting the powers of the company. So whenever the company borrows from a financial institution, these financial institutions may appoint some of the directors as the board of directors who will be just controlling the affairs of the company. So this becomes one of the drawback for this financial institutions. So we have come to the end of this session. Hope you have all understood the sources of finance, that is debentures, commercial banks and financial institutions. Thank you.